The folks that are prepared for the downturn will make an absolute fortune if they do it correctly, because there's so many more trading instruments to allow us to make money in a bear market. I feel sorry for the buy and hold, or even the buy and hope investor. Those folks that decide to hold on, it could take them a decade or more just to get back to break even.
Hello, everyone. I'm Olivia Vaz. Welcome to the Alternative Edge Report. We're going to get right into our special guest today, AJ Monte. AJ has 40 years as a market analyst, has 2 best-selling books, and is the founder of Sticky Trades. AJ, welcome.
Thank you, Vaz. Thank you for having me. This is a great topic, by the way. This is how I got introduced to the markets, and we'll talk about that. But this is my wheelhouse right here, and I'm happy you're doing the show here on this topic of gold and silver and the precious metals and such.
Oh, it's going to be a trifecta today, everyone. Get ready. But before we get into those, AJ, everyone's talking about the bond market and the concerns, and I know you are as well.
Well, I'm seeing actually instability, because if you're paying close attention to what's happening with our national debt, there are bonds coming due, and the government has to refinance that. And as interest rates are going higher, the bond market has a mind of its own. They could care less what the Fed has to say. So the bonds are dropping in order to get the interest rates higher to make the bond market more attractive to those who want to buy our debt. And I think the world knows that there's trillions of dollars that has to be refinanced over time, and we're just digging ourselves into a big hole. And I don't see that. I don't see that getting better. I don't care what the new administration has planned with Elon Musk and Vivek Ramaswamy cutting spending. They're just not going to be able to do that in a 4-year period. It's just too big of a mess, so to speak.
So, AJ, you mentioned how we're just digging into a bigger hole, while we're seeing the market continue to go
Yeah.
up. I understand as a trader that the bond market wags the dog, but we are seeing kind of this inefficiency. So, what is there to come with this? Are we going to get into like a debt
Well,
crisis that is the undercurrent?
Well, now I don't want to scare anyone watching this video, but what I see on the horizon is a catastrophe that's going to dwarf what we saw in the financial crisis of 2008 and the tech bubble in 2000 combined. Now, I'm not a perma bear. I'm a market analyst. That's where I feel most comfortable, is projecting price action. And I don't think even you know this, but we have a third party that tracks my forecasts on stocks, commodities, any kind of cryptocurrency like Bitcoin. And we're currently tracking an 82.2% accuracy with regard to the targets hitting. Now, keep in mind, that's for swing traders who are looking to make money in the trading legs, the ups and downs of the market. But when I apply my forecasting techniques to monthly charts, we're talking about corrections that have never been seen. And I'm going to go so far to say it's going to be a lot more than a correction. I see it's going to be a crash that could shock people. And you heard it here. I think it will be shocking. And we're just seeing the beginning stages of it. With the markets yesterday were up quite significantly, the Dow especially. And today, as you're recording this, I don't want to date the recording too much, but we have absolutely no follow through in the
Mhm.
market. So there's not a continuation of that momentum. It's just boom, dead stop at resistance. And now the market is starting to pull back from that.
You're
So
right,
it's going to be
AJ.
interesting. Yeah.
Yeah. It is gonna be interesting. You're right. The momentum kind of has been sucked out of this market since the new year. We've kind of just been wallowing around. We did
Mhm.
have a recent dip recently, and it's kind of in a shocked. Maybe it's thinking right now, and it's thinking about these variables that you're discussing that the world knows, and we're just kind of being, a little. We're on that hopium trade of just, oh, let's throw money at Apple, Nvidia. The market always goes up. This is America, etc. But as AJ's discussing, there are some other underlying factors that is bigger than us. And what you mentioned, that we're going to have something bigger that can engulf like 2008. What is that going to look like?
Well, first and foremost, my biggest hit in the market was in 1987. Now, at the
Mhm.
time, I did not know the charts and technical analysis the way I do now. I didn't have the experience. I was only on the trading floor for 5 years at that point, and I thought I knew it all by then. And I had made a lot of money in a very short period of time. But when 1987 hit, it literally wiped me out. And I wrote about that in my most popular book, the Five Points for Trading Success. And what happened then, it took me 7 years to rebuild what I had lost in 3 months. Now, since that crash in 87, I made money, significant money on the way down in the crashes that followed, particularly 2000, using options and different leveraged instruments to get short the market. And then 2008 was just, that was just the gift that kept on giving. It was a shorter
Mhm.
period of time, but we made significant amounts of money. So what I'm doing is I'm preparing our members and those folks who follow me on Zero Hedge and some of the other social media pages. I'm trying to have them focus on the charts, turn off the television, focus on the charts, and the charts don't lie. They're giving very, very clear signals that we're in an extremely overbought condition.
Mhm.
And you could even look at the moving averages. You could see how the moving averages are starting to roll over in some of the major market ETFs right now. But it's going to be ugly. It's here. Let me just put it this way: it'll
Mhm.
start off slow with some pretty big down days, maybe 1,000 or 1,200 point down day, but then we'll get that in succession. Then what will happen? I know I'm sticking my neck out making this kind of a forecast because no one will do that. They're all bulls still. But
Mhm.
once we get to a level where the margin selling kicks in and people can no longer hold on to these leveraged positions like many of the investors even are doing, then you're going to see the circuit breakers start to go off, which we haven't seen in a while. Once the circuit breakers go off, you'll start to see it's going to be the beginning stages of capitulation. Capitulation usually is at the end of a crash or an end of a bear market. I think you're going to see three stages of capitulation. The initial stage after the circuit breakers go off, then there'll be a secondary capitulation. Then I think the third level of capitulation will be where we're starting to hit a bottom. But I don't think that's going to happen even after 3 years. I think it could be 3 years minimum, possibly 5 year down trend in the market, bear market, and maybe even up to a 7 year downtrend. And
Mhm.
again, I'm just using trend lines and forecasting more or less the angles of previous or past sell-offs and just projecting forward. And
Right.
again, it doesn't take a rocket science to figure out that it's going to be bad. But
Well,
it's good for us. It's good for
there
us.
yes, and there's a fine line
Yeah,
between a genius and insane, but I don't think this is
right.
insane. You're ignoring the news, you're looking at what's in front of you, and you're seeing these alarming technicals that are looking for a multi-year sell-off. I'm just looking at I'm
Well,
picturing Niagara Falls, and you just keep going
well, you
and
mentioned
going and going and going.
right. You mentioned something about the news. I don't watch cable television. I do get my news, and most often I'm writing the news actually. But I follow what Paul Tudor Jones has done for years, focus on the charts. Now, Paul Tudor was actually a commodity trader before he was the famous Paul Tudor billionaire fund manager. And even back then in the 80s, and if you get a chance to get him on your show, he'll tell you this, is that he would turn the news completely off. And in fact, he wouldn't even ride public transportation for fear that someone in the public will contaminate his opinion or thoughts about the market. So he more or less removed himself from the noise and stayed focused on those charts. And back in
Mhm.
the 80s, we didn't have the computers to do the charting. We had to do it all by hand. And he comes from that same school that I do. And I say this in an excited sort of way because the people who are prepared for this could absolutely make a fortune. Now, I'm not making any kind of income claim here. I'm just telling the folks that are prepared for the downturn will make an absolute fortune if they do it correctly, because there's so many more trading instruments to allow us to make money in a bear market. You have the inversely related ETFs, you have gold, silver, you got those I think are going to go through the
Mhm.
roof. And
Mhm.
then you have options, of course, that give you those leveraged opportunities without adding too much more risk to your portfolio. And that takes a little
Mhm.
bit more time to learn, but there's just opportunity everywhere. I feel sorry for the buy and hold or even the buy and hope investor. Those folks
Mhm.
that decide to hold on, it could take them a decade or more just to get back to break even. And we saw
Yeah,
that in 2000. Remember 2000? We saw that.
yes, and you have been on the right side of the market. You were just describing how you made a fortune during that sell off previously.
Right.
So it seems like it's coming. I know it's we're going to get a lot of comments on timing. I don't know if you have a time prediction for this.
Well, I think within the next 6 months, we're going to see
Wow.
the beginning stages. Yeah, it's that
Okay.
close.
Okay.
Because we've already been in this prolonged and overextended vertical market. I mean, go look at a chart of Bitcoin. It's insane. Go look at MicroStrategy and what Michael Saylor's trying to do, selling his stock to go buy more Bitcoin. It's like the tulip, the run on the tulip craze all over again. But we're talking about more financially related, stocks and cryptocurrency. And by the way, for those that are watching, I trade Bitcoin and Bitcoin related stocks, but I've never owned Bitcoin. I think there's much more opportunity trading it. And our returns are still off the charts better than if you had just bought Bitcoin a year ago and held on. Now, I'm not saying that's going to be the same return as someone that got in at Bitcoin at 60 cents, but
Hmm.
there's still opportunity for the people that think too late to the party. There's nothing I could do. No, the timing couldn't be better than now
Hmm.
to get
Exactly.
involved. Yeah.
And you're discussing let's talk a game plan because you're discussing how people can make a
Right.
fortune if they are preparing correctly. You've discussed gold and silver. Let's start with those because we have a lot of members or a lot of viewers that are certainly gold bugs and looking to invest in gold and silver as a
Right.
alternative. How would you how what do you like in that market to hedge?
Well, what I'm doing, and I make my silver trades very public on X. If
Hmm.
anyone goes to my X page, it's at the ampersand, the option Oracle, and I post Bitcoin projections and targets and silver especially. So what I do with gold and silver, my wife is also in the industry for almost 30 years. We accumulate on a regular basis gold and silver bars. So we do that, we tuck it away, put it in the safe deposits, and we don't even think about that. We just build assets. So our main accumulation of assets is gold, silver, and agricultural properties. So we diversify into real estate a bit, not residential.
Hmm.
Agricultural right now is much better because you could have a return on that. Grow hay, you could put cows on there, lease your land out,
Hmm.
whatever. Not to get into real estate. But then what I do with gold, GLD especially, and SLV, which are the two major ETFs for gold and silver, is I trade in and out of those technically.
Hmm.
So
Hmm.
I'll accumulate SLV, for instance, or GLD. When it gets up to a certain level, I'll sell. And if the signals look like sell signals for the short term price action, I will sell 10, maybe 15% of my position to raise
Hmm.
cash, look for it to drop down. Then I get to buy more of the same at a cheaper price. So I'm parlaying that. So when it goes up, I sell a little. When it comes down, I buy more than what I had. So every
Hmm.
time I do this, I've been doing this for 17 years. So the position gets bigger and bigger and bigger. And then you could start using options to build an income off of that portfolio. Now, that gets a
Hmm.
little bit more complicated when you talk about options, but it's a real strategy it's been working for a very long time. And I could show anyone how to do it just by looking at a chart. You don't
That's
have to
great.
have a PhD. Yeah.
Poor, hungry, and driven. That's my PhD. No, I'm just kidding. That's how we
Hey,
all
that's
got
not a
on top,
terrible thing.
everyone.
I remember those days. Yeah, after
Oh,
1987,
yeah.
very, very
Hey,
poor.
I think that we can all relate. I mean, I think everyone watching this can relate, especially when you were talking about, making a great trade. Then, things go haywire and it's like now what we do. But that's how you truly become an amazing investor, an amazing trader, is being put in those opportunities and finding a way out of it. Now, AJ, real quick before you go, AJ talks about buying in and out of silver and gold, basically like silently accumulating
Yeah,
it, but trading in and out of them as they turn lower. I would like to just address for anyone that's interested in options or looking for another way to hedge as well. You talked about in your article doing like a long dated put strategy. Tell us
right.
about that.
Well, for the option traders out there that know the lingo, I trade a lot of diagonal calendar put spreads. So what that is, a put more or less is an instrument that goes up in value as the underlying price drops over time. I buy long term or leap puts that are right now. I'm buying slightly out of the money leap puts, and then what I do is I sell other puts that are more near term to expiration,
Mhm.
and I use the market's money to pay down the cost basis of my long position. And over a 9 to 10 month period, I'm paying down the cost basis of those leaps, again, using the market's money to where
Mhm.
now I have a zero cost basis. I call those cash cows. Once the cost basis of the leap is paid for by the premium pulled from the market, there's zero risk, zero.
Mhm.
And that's a great place to be. And then what we do, again, we have a team that does this as well. We take the premium once the cost basis is paid down to zero, then we take the additional premium and start buying more and other positions in different types of stocks or ETFs. And that's working extremely well. Now, you could do it on the upside with calls, but right now, like I said, anticipating a crash, I want to be ready for the downside. Now, for those who know nothing about options, learn what a put and a call is first, and then gradually, I would say, stay focused on diagonal calendar put spreads. Don't get all fancy and sophisticated. Just think of that one strategy, diagonal calendar spreads, and your life will change, because once that cost basis pay down, you could rest at night knowing you can't lose money. Once the risk is paid down to zero, it's just free money printing from the market.
And like you said,
Yeah.
AJ, it's a cash cow to put on all that agriculture that you're buying up as well.
Oh, that's a fun thing too. Take your profits and roll it in. It doesn't matter if you live in the city or if you live in the most luxurious part of Florida like you are, Vaz. You could still find a place. Go buy a couple of acres and turn it into money as well. So it's a lot of fun.
AJ,
Yeah.
we are so thankful to have you on the show today. Excellent conversation. I could go hours and hours, so we hope to have you back on soon. Thank you so much for getting us covered for
Thank
what's to
you.
come. Brace for
Thank.
impact, everyone. AJ Monte, thank you again. Guys, that is it for the Alternative Edge Report. Make sure to like and subscribe so you don't miss special guests like AJ.